Chapter 3. The Business of Insurance. Title 1. Insurance Companies, Organization, Capitalization and Authorization. SEC 190. For purposes of this code, the term insurer or insurance company shall include all partnerships, associations, cooperatives, or corporations, including government-owned or controlled corporations or entities, engaged as principals in the insurance business, excepting mutual benefit associations. Unless the context otherwise requires, the term shall also include professional reinsurers defined in Section 288. Domestic company shall include companies formed, organized, or existing under the laws of the Philippines. Foreign company when used without limitation shall include companies formed, organized, or existing under any laws other than those of the Philippines. SEC 191. The provisions of the Corporation Code, as amended, shall apply to all insurance corporations now or hereafter engaged in business in the Philippines insofar as they do not conflict with the provisions of this chapter. SEC 192. No corporation, partnership, or association of persons shall transact any insurance business in the Philippines except as agent of a corporation, partnership or association authorized to do the business of insurance in the Philippines, unless possessed of the capital and assets required of an insurance corporation doing the same kind of business in the Philippines and invested in the same manner, unless the Commissioner shall have granted it a certificate to the effect that it has complied with all the provisions of this code. Every entity receiving any such certificate of authority shall be subject to the insurance and other applicable laws of the Philippines and to the jurisdiction and supervision of the Commissioner. SEC 193. No insurance company shall transact any insurance business in the Philippines until after it shall have obtained a certificate of authority for that purpose from the Commissioner upon application therefor and payment by the company concerned of the fees hereinafter prescribed. The Commissioner may refuse to issue a certificate of authority to any insurance company if, in his judgment, such refusal will best promote the interest of the people of this country. No such certificate of authority shall be granted to any such company until the Commissioner shall have satisfied himself by such examination as he may make and such evidence as he may require that such company is qualified by the laws of the Philippines to transact business therein, that the grant of such authority appears to be justified in the light of local economic requirements, and that the direction and administration, as well as the integrity and responsibility of the organizers and administrators, the financial organization and the amount of capital, reasonably assure the safety of the interests of the policyholders and the public. In order to maintain the quality of the management of the insurance companies and afford better protection to policyholders and the public in general, any person of good moral character, unquestioned integrity, and recognized competence may be elected or appointed director or officer of insurance companies in accordance with the pertinent provisions contained in the corporate governance circulars prescribed by the Commissioner. In addition hereto, the Commissioner shall prescribe the qualifications of directors, executive officers, and other key officials of insurance companies for purposes of this section. No person shall concurrently be a director and/or officer of an insurance company and an adjustment company. Before issuing such certificate of authority, the Commissioner must be satisfied that the name of the company is not that of any other known company transacting a similar business in the Philippines, or a name so similar as to be calculated to mislead the public. The Commissioner may issue rules and regulations on the use of names of insurance companies and other supervised persons or entities. The certificate of authority issued by the Commissioner shall expire on the last day of December, 3 years following its date of issuance, and shall be renewable every 3 years thereafter, subject to the company's continuing compliance with the provisions of this code, circulars, instructions, rulings, or decisions of the Commission. Every company receiving any such certificates of authority shall be subject to the provisions of this code and other related laws and to the jurisdiction and supervision of the Commissioner. No insurance company may be authorized to transact in the Philippines the business of life and non-life insurance concurrently, unless specifically authorized to do so by the Commissioner, provided, that the terms life and non-life insurance shall be deemed to include health, accident, and disability insurance. No insurance company shall have equity in an adjustment company, and neither shall an adjustment company have equity in an insurance company. No insurance company issued with a valid certificate of authority to transact insurance business anywhere in the Philippines by the Insurance Commissioner, shall be barred, prevented, or disenfranchised from issuing any insurance policy or from transacting any insurance business within the scope or coverage of its certificate of authority, anywhere in the Philippines, by any local government unit or authority, for whatever guise or reason whatsoever, including under any kind of ordinance, accreditation system, or scheme. Any local ordinance or local government unit regulatory issuance imposing such restriction or disenfranchisement on any insurance company shall be deemed null and void ab initio. SEC 194. Except as provided in Section 289, no new domestic life or non-life insurance company shall, in a stock corporation, engage in business in the Philippines unless possessed of a paid-up capital equal to at least 1 billion pesos, P1,000,000,000,000.00, provided that a domestic insurance company already doing business in the Philippines shall have a net worth by June 30, 2013 of 250 million pesos, P250,000,000,000.00. Furthermore, said company must have by December 31, 2016, an additional 300 million pesos, P300,000,000,000.00, in net worth, by December 31, 2019, an additional 350 million pesos, P350,000,000,000.00, in net worth, and by December 31, 2022, an additional 400 million pesos, P400,000,000,000.00, in net worth. The Commissioner may, as a pre-licensing requirement of a new insurance company, in addition to the paid-up capital stock, require the stockholders to pay in cash to the company in proportion to their subscription interests a contributed surplus fund of not less than 100 million pesos, P100,000,000,000.00. He may also require such company to submit to him a business plan showing the company's estimated receipts and disbursements, as well as the basis therefor, for the next succeeding 3 years. If organized as a mutual company, in lieu of such net worth, it must have available total members' equity in an amount to be determined by the Insurance Commission above all liabilities for losses reported, expenses, taxes, legal reserve, and reinsurance of all outstanding risks, and the contributed surplus fund equal to the amounts required of stock corporations. A stock insurance company doing business in the Philippines may, subject to the pertinent law and regulation which now or hereafter may be in force, alter its organization and transform itself into a mutual insurance company. The Secretary of Finance may, upon recommendation of the Commissioner, increase such minimum paid-up capital stock or cash assets requirement under such terms and conditions as he may impose, to an amount which, in his opinion, would reasonably assure the safety of the interests of the policyholders and the public. The minimum paid-up capital and net worth requirement must remain unimpaired for the continuance of the license. The Commissioner may require the adoption of the risk-based capital approach and other internationally accepted forms of capital framework. For the purpose of this section, net worth shall consist of a. Paid-up capital, b. Retained earnings, c. Unimpaired surplus, and d. Revaluation of assets as may be approved by the Commissioner. The Commission may adopt for purposes of compliance with capital build-up requirement under this code the recognition as part of the capital account, capital notes, or debentures which are subordinate to all credits and senior only to common capital stocks. The President of the Philippines may order a periodic review every 2 years the capital structure set out above to determine the capital adequacy of the local insurance industry from and after the integration and liberalization of the financial services, including insurance, in the ASEAN region. For this purpose, a review committee consisting of representatives from the Department of Finance, DOF, the Insurance Commission, IC, the National Economic and Development Authority, NADA, the Securities and Exchange Commission, SEC, and other agencies which the President may designate shall conduct the review and may recommend to the President to adopt for implementation the necessary capital adjustment. SEC 195. Every company must, before engaging in the business of insurance in the Philippines, file with the Commissioner the following. A certified copy of the last annual statement or a verified financial statement exhibiting the condition and affairs of such company. B. If incorporated under the laws of the Philippines, a copy of the Articles of Incorporation and Bylaws, and any amendments to either, certified by the Securities and Exchange Commission to be a copy of that which is filed in its office. C. If incorporated under any laws other than those of the Philippines, a certificate from the Securities and Exchange Commission showing that it is duly registered in the Mercantile Registry of that Commission in accordance with the Corporation Code. A copy of the Articles of Incorporation and Bylaws, and any amendments to either, if organized or formed under any law requiring such to be filed, duly certified by the officer having the custody of same, or if not so organized, a copy of the law, charter, or deed of settlement under which the deed of organization is made, duly certified by the proper custodian thereof, or proved by affidavit to be a copy, also, a certificate under the hand and seal of the proper officer of such state or country, having supervision of insurance business therein, if any there be, that such corporation or company is organized under the laws of such state or country, with the amount of capital stock or assets and legal reserve required by this code. D. If not incorporated and of foreign domicile, aside from the certificate mentioned in paragraph C of this section, a certificate setting forth the nature and character of the business, the location of the principal office, the name of the individual or names of the persons composing the partnership or association, the amount of actual capital employed or to be employed therein, and the names of all officers and persons by whom the business is or may be managed. The certificate must be verified by the affidavit of the chief officer, secretary, agent, or manager of the company, and if there are any written articles of agreement of the company, a copy thereof must accompany such certificate. SEC 196. The Commissioner must require as a condition precedent to the transaction of insurance business in the Philippines by any foreign insurance company, that such company file in his office a written power of attorney designating some person who shall be a resident of the Philippines as its general agent, on whom any notice provided by law or by any insurance policy, proof of loss, summons, and other legal processes may be served in all actions or other legal proceedings against such company, and consenting that service upon such general agent shall be admitted and held as valid as if served upon the foreign company at its home office. Any such foreign company shall, as further condition precedent to the transaction of insurance business in the Philippines, make and file with the Commissioner an agreement or stipulation, executed by the proper authorities of said company in form and substance as follows. The name of company does hereby stipulate and agree in consideration of the permission granted by the Insurance Commissioner to transact business in the Philippines, that if at any time said company shall leave the Philippines, or cease to transact business therein, or shall be without any agent in the Philippines on whom any notice, proof of loss, summons, or legal process may be served, then in any action or proceeding arising out of any business or transaction which occurred in the Philippines, service of any notice provided by law, or insurance policy, proof of loss, summons, or other legal process may be made upon the Insurance Commissioner, and that such service upon the Insurance Commissioner shall have the same force and effect as if made upon the company. Whenever such service of notice, proof of loss, summons, or other legal process shall be made upon the Commissioner, he must, within 10 days thereafter, transmit by mail, postage paid, a copy of such notice, proof of loss, summons, or other legal process to the company at its home or principal office. The sending of such copy by the Commissioner shall be a necessary part of the service of the notice, proof of loss, or other legal process. SEC 197. No insurance company organized or existing under the government or laws other than those of the Philippines shall engage in business in the Philippines unless possessed of unimpaired capital or assets and reserve of not less than 1 billion pesos, P1,000,000,000,000.00, nor until it shall have deposited with the Commissioner for the benefit and security of the policyholders and creditors of such company in the Philippines, securities satisfactory to the Commissioner consisting of good securities of the Philippines, including new issues of stock of registered enterprises, as this term is defined in Executive Order No. 226 of 1987, as amended, to the actual market value of not less than the amount herein required, provided, that at least 50% of such securities shall consist of bonds or other instruments of debt of the Government of the Philippines, its political subdivisions and instrumentalities, or of government-owned or controlled corporations and entities, including the Bangko Sentral ng Pilipinas, provided, further, that the total investment of a foreign insurance company in any registered enterprise shall not exceed 20% of the net worth of said foreign insurance company nor 20% of the capital of the registered enterprise, unless previously authorized in writing by the Commissioner. The Commissioner may, as a pre-licensing requirement of a new branch office of a foreign insurance company, in addition to the required asset or net worth, require the company to have an additional surplus fund in an amount to be determined by the Insurance Commission. For purposes of this code, the net worth of a foreign insurance company shall refer only to its net worth in the Philippines. SEC 198. The Commissioner shall hold the securities, deposited as required in the immediately preceding section, for the benefit and security of all the policyholders and creditors of the company depositing the same, provided, that the Commissioner may, as long as the company is solvent, permit the company to collect the interest or dividends on the securities so deposited, and, from time to time, with his assent, to withdraw any of such securities, upon depositing with said Commissioner other like securities, the market value of which shall be equal to the market value of such as may be withdrawn. In the event of any company ceasing to do business in the Philippines, the securities deposited as aforesaid shall be returned to the company upon the Commissioner's written approval and only after the company has duly proven in its application therefor that it has no further liability whatsoever under any of its policies nor to any of its creditors in the Philippines. SEC 199. Every foreign company doing business in the Philippines shall set aside an amount corresponding to the legal reserves of the policies written in the Philippines and invest and keep the same therein in accordance with the provisions of this section. The legal reserve therein required to be set aside shall be invested only in the classes of Philippine securities described in Section 206, provided, however, that no investment in stocks or bonds of any single entity shall, in the aggregate exceed 20% of the net worth of the investing company or 20% of the capital of the issuing company, whichever is the lesser, unless otherwise approved in writing by the Commissioner. The securities purchased and kept in the Philippines under this section, shall not be sent out of the territorial jurisdiction of the Philippines without the written consent of the Commissioner. Title 2. Solvency. SEC 200. An insurance company doing business in the Philippines shall at all times maintain the minimum paid-up capital, and net worth requirements as prescribed by the Commissioner. Such solvency requirements shall be based on internationally accepted solvency frameworks and adopted only after due consultation with the insurance industry associations. Whenever the aforementioned requirement be found to be less than that herein required to be maintained, the Commissioner shall forthwith direct the company to make good any such deficiency by cash, to be contributed by all stockholders of record in proportion to their respective interests, and paid to the treasurer of the company, within 15 days from receipt of the order, provided, that the company in the interim shall not be permitted to take any new risk of any kind or character, unless and until it make good any such deficiency, provided, further, that a stockholder who aside from paying the contribution due from him, pays the contribution due from another stockholder by reason of the failure or refusal of the latter to do so, shall have a lien on the certificates of stock of the insurance company concerned appearing in its books in the name of the defaulting stockholder on the date of default, as well as on any interests or dividends that have accrued or will accrue to the said certificates of stock, until the corresponding payment or reimbursement is made by the defaulting stockholder. SEC 201. No domestic insurance corporation shall declare or distribute any dividend on its outstanding stocks unless it has met the minimum paid-up capital and net worth requirements under Section 194 and except from profits attested in a sworn statement to the Commissioner by the President or Treasurer of the corporation to be remaining on hand after retaining unimpaired a. the entire paid-up capital stock, b. the solvency requirements defined by Section 200. c. In the case of life insurance corporations, the legal reserve fund required by Section 217. d. In the case of corporations other than life, the legal reserve fund required by Section 219, and e. a sum sufficient to pay all net losses reported, or in the course of settlement, and all liabilities for expenses and taxes. Any dividend declared or distributed under the preceding paragraph shall be reported to the Commissioner within 30 days after such declaration or distribution. If the Commissioner finds that any such corporation has declared or distributed any such dividend in violation of this section, he may order such corporation to cease and desist from doing business until the amount of such dividend or the portion thereof in excess of the amount allowed under this section has been restored to said corporation. The Commissioner shall prescribe solvency requirements for branches of foreign insurance companies operating in the Philippines. Title 3. Assets. SEC 202. In any determination of the financial condition of any insurance company doing business in the Philippines, there shall be allowed and admitted as assets only such assets legally or beneficially owned by the insurance company concerned as determined by the Commissioner, which consist of a. cash in the possession of the insurance company or in transit under its control, and the true and duly verified balance of any deposit of such company in a financially sound bank or trust company duly authorized by the Bangko Sentral ng Pilipinas. b. Investments in securities, including money market instruments, and in real property acquired or held in accordance with and subject to the applicable provisions of this code and the income realized therefrom or accrued thereon. c. Loans granted by the insurance company concerned to the extent of that portion thereof adequately secured by non-speculative assets with readily realizable values in accordance with and subject to the limitations imposed by applicable provisions of this code. d. Policy loans and other policy assets and liens on policies, contracts, or certificates of a life insurance company, in an amount not exceeding legal reserves and other policy liabilities carried on each individual life insurance policy, contract, or certificate. e. The net amount of uncollected and deferred premiums and annuity considerations in the case of a life insurance company which carries the full mean tabular reserve liability. f. Reinsurance recoverable by the ceding insurer. 1. From an insurer authorized to transact business in this country, the full amount thereof, or 2. From an insurer not authorized in this country, in an amount not exceeding the liabilities carried by the ceding insurer for amounts withheld under a reinsurance treaty with such unauthorized insurer as security for the payment of obligations thereunder if such funds are held subject to withdrawal by, and under the control of, the ceding insurer. The Commissioner may prescribe the conditions under which a ceding insurer may be allowed credit, as an asset or as a deduction from loss and unearned premium reserves, for reinsurance recoverable from an insurer not authorized in this country but which presents satisfactory evidence that it meets the applicable standards of solvency required in this country. g. Funds withheld by a ceding insurer under a reinsurance treaty, provided reserves for unpaid losses and unearned premiums are adequately provided. h. Deposits or amounts recoverable from underwriting associations, syndicates, and reinsurance funds, or from any suspended banking institution, to the extent deemed by the Commissioner to be available for the payment of losses and claims and values to be determined by him. I. Electronic data processing machines, as may be authorized by the Commissioner to be acquired by the insurance company concerned, the acquisition cost of which to be amortized in equal annual amounts within a period of 5 years from the date of acquisition thereof. J. Investments in mutual funds, real estate investment trusts, salary loans, unit investment trust funds and special deposit accounts, subject to the conditions as may be provided for by the Commissioner. K. Other assets, not inconsistent with the provisions of paragraphs A, 2, J, hereof, which are deemed by the Commissioner to be readily realizable and available for the payment of losses and claims at values to be determined by him in a circular, rule or regulation. SEC 203. In addition to such assets as the Commissioner may from time to time determine to be non-admitted assets of insurance companies doing business in the Philippines, the following assets shall in no case be allowed as admitted assets of an insurance company doing business in the Philippines, in any determination of its financial condition. A. Goodwill, trade names, and other like intangible assets. B. Prepaid or deferred charges for expenses and commissions paid by such insurance company. C. Advances to officers, other than policy loans, which are not adequately secured and which are not previously authorized by the Commissioner, as well as advances to employees, agents, and other persons on mere personal security. D. Shares of stock of such insurance company, owned by it, or any equity therein as well as loans secured thereby, or any proportionate interest in such shares of stock through the ownership by such insurance company of an interest in another corporation or business unit. E. Furniture, furnishing, fixtures, safes, equipment, library, stationery, literature, and supplies. F. Items of bank credits representing checks, drafts or notes returned unpaid after the date of statement. G. The amount, if any, by which the aggregate value of investments as carried in the ledger assets of such insurance company exceeds the aggregate value thereof as determined in accordance with the provisions of this code and/or the rules of the Commissioner. All non-admitted assets and all other assets of doubtful value or character included as ledger or non-ledger assets in any statement submitted by an insurance company to the Commissioner, or in any insurance examiner's report to him, shall also be reported, to the extent of the value disallowed as deductions from the gross assets of such insurance company, except where the Commissioner permits a reserve to be carried among the liabilities of such insurance company in lieu of any such deduction. Title 4. Investments. SEC 204. A life insurance company may lend to any of its policyholders upon the security of the value of its policy such sum as may be determined pursuant to the provisions of the policy. No insurance company shall loan any of its money or deposits to any person, corporation, or association, except upon the security of any of the following. A. First mortgage or deeds of trust of registered, unencumbered, improved or unimproved real estate, including condominiums. B. First mortgages or deeds of trust of actually cultivated, improved, and unencumbered agricultural lands in the Philippines. C. Purchase money mortgages, lease purchase agreements or similar securities executed or received by it on account of the sale or exchange of real property acquired pursuant to sections 206 and 208. D. Bonds or other instruments of indebtedness issued or guaranteed by the government of the Philippines or its political subdivisions authorized by law to incur such obligations or issue such guarantees, or of government-owned or controlled corporations and instrumentalities including the Bangko Sentral ng Pilipinas, or E. Obligations issued or guaranteed by universal banks, commercial banks, offshore banking units, investment houses, or other financial intermediaries duly registered with the Bangko Sentral ng Pilipinas, or F. Obligations issued or guaranteed by foreign banks or corporations, each of which shall have total net worth of at least $150 million, US $150,000,000,000.00, or such other higher net worth as may be prescribed by the Insurance Commission, as shown in their financial statements as of the immediately preceding fiscal year, or G. assignments of monetary instruments such as cash deposits, deposit certificates or other similar instruments of universal banks, commercial banks, investment houses, or other financial intermediaries duly registered with the Banco Central ng Pilipinas, or h. pledges of shares of stock, bonds, or other instruments of indebtedness specified in Section 209, or I. chattel mortgages over equipment not more than 3 years old, and j. such other security as may be approved by the Commissioner. The loans provided in the preceding subsection shall be subject to the following conditions. 1. The amount of loan secured by real estate mortgage over a non-agricultural land shall not exceed 70% of its appraised value, and in the case of a loan secured by a real estate mortgage over an agricultural land, the amount of loan shall not exceed 40% of its market value, provided that, in no case shall such loan have a maturity period in excess of 25 years. 2. Unless approved by the Commissioner, no loan may be granted upon the security of a mortgage on improved real estate if the improvements thereon do not belong to the owner of the land, and the owner of the improvements does not sign the deed of mortgage. However, if the owner of the land is the government of the Philippines or any of its political subdivisions and a long-term lease has been executed in favor of the owner of the improvements, the owner of the land need not be a party to the deed of mortgage. The expiration date of the lease shall not, however, precede the maturity of the loan. The phrase improved real estate as used herein shall mean land with permanent building or buildings erected thereon. 3. Lease agreements or similar securities received on the sale of real estate property shall not exceed 100% of the selling price of said property, or 100% of its market value at the time of its disposition, whichever amount is lower. However, in no case shall such agreement have a maturity period not exceeding 30 years. 4. Loans secured by shares of stock of solvent corporations or institutions shall not exceed 50% of I. the weighted average market price for the 180 days preceding the approval of the loan for shares listed in the stock exchange, and 2. For unlisted shares, the adjusted book value of such shares. 5. Loans secured by the chattel mortgages over equipment shall not exceed 70% of the market value of said equipment. SEC 205. No loan by any insurance company on the security of real estate shall be made unless the title to such real estate shall have first been registered in accordance with the existing Land Registration Act, or shall have been previously registered under the provisions of the existing mortgage law and the lien or interest of the insurance company as mortgagee has been registered. SEC 206. A. An insurance company may purchase, hold, own and convey such property, real and personal, as may have been mortgaged, pledged, or conveyed to it in good faith in trust for its benefit by reason of money loaned by it in pursuance of the regular business of the company, and such real or personal property as may have been purchased by it at sales under pledges, mortgages, or deeds of trust for its benefit on account of money loaned by it, and such real and personal property as may have been conveyed to it by borrowers in satisfaction and discharge of loans made by the company in payment or by reason of any loan made by the company in payment or by reason of any loan made by it shall be sold by the company within 20 years after the title thereto has been vested in it. B. An insurance company may purchase, hold, and own the following. 1. Real properties which serve as its main place of business and / or branch offices, provided that such investment shall not in the overall exceed 20% of its net worth as shown by its latest financial statement approved by the Commissioner. 2. Bonds or other instruments of indebtedness of the Government of the Philippines or its political subdivisions authorized by law to issue bonds at the reasonable market value thereof. 3. Bonds or other instruments of debt of government-owned or controlled corporations and entities, including the Banco Central ng Pilipinas. 4. bonds, debentures, or other instruments of indebtedness of any solvent corporation or institution created or existing under the laws of the Philippines, provided, however, that the issuing, assuming, or guaranteeing entity or its predecessors shall not have defaulted in the payment of interest on any of its securities, and that during each of any three, including the last two, of the five fiscal years next preceding the date of acquisition by such insurance company of such bonds, debentures, or other instruments of indebtedness, the net earnings of the issuing, assuming, or guaranteeing institution available for its fixed charges, as hereinafter defined, shall have been not less than 1 1/4, 1 1/4, times the total of its fixed charges for such year, provided, further, that no life insurance company shall invest in or loan upon the obligations of any one institution in the kinds permitted under this subsection an amount in excess of 25%, of the total admitted assets of such insurer as of December 31st next preceding the date of such investment. As used in this subsection, the term net earnings available for fixed charges shall mean net income after deducting operating and maintenance expenses, taxes other than income taxes, depreciation and depletion, but excluding extraordinary non-recurring items of income or expense appearing in the regular financial statement of the issuing, assuming, or guaranteeing institution. The term fixed charges shall include interest on funded and unfunded debt, amortization of debt discount, and rentals for leased properties. 5. Preferred or guaranteed stocks of any solvent corporation or institution created or existing under the laws of the Philippines, provided, that if the stocks are guaranteed, the amount of stocks so guaranteed is not in excess of 50%, of the amount of the preferred or common stocks, as the case may be, of the guaranteeing corporation, provided, finally, that no life insurance company shall invest in or loan upon obligations of any one institution in the kinds permitted under this subsection an amount in excess of 10%, of the total admitted assets of such insurer as of December 31st next preceding the date of such investment. 6. Common stocks of any solvent corporation or institution created or existing under the laws of the Philippines, provided, however, that no life insurance company shall invest in or loan upon the obligations of any one corporation or institution in the kinds permitted under this subsection an amount in excess of 10%, of the total admitted assets of such insurer as of December 31st next preceding the date of such investment. 7. Securities issued by a registered enterprise, as this term is defined in Executive Order No. 226, otherwise known as the Omnibus Investments Code of 1987, as amended, provided, that the total investment of a domestic non-life insurance company in any registered enterprise shall not exceed 20%, of the net worth of said insurance company as shown by its aforesaid financial statement unless previously authorized by the Commissioner. 8. Certificates, notes and other obligations issued by the trustees or receivers of any institution created or existing under the laws of the Philippines which, or the assets of which, are being administered under the direction of any court having jurisdiction, provided, however, that such certificates, notes or other obligations are adequately secured as to principal and interests. 9. Equipment trust obligations or certificates which are adequately secured or other adequately secured instruments evidencing an interest in equipment wholly or in part within the Philippines, provided, however, that there is a right to receive determined portions of rental, purchase or other fixed obligatory payments for the use or purchase of such equipment. 10. Any obligation of any corporation or institution created or existing under the laws of the Philippines which is, on the date of acquisition by the insurer, adequately secured and has qualities and characteristics wherein the speculative elements are not predominant. 11. Such other securities as may be approved by the Commissioner. C. Any domestic insurer which has outstanding insurance, annuity, or reinsurance contracts in currencies other than the national currency of the Philippines may invest in, or otherwise acquire or loan upon securities and investments in such currency which are substantially of the same kinds, classes, and investment grades as those eligible for investment under the foregoing subdivisions of this section, but the aggregate amount of such investments and of such cash in such currency which is at any time held by such insurer shall not exceed 1½ times the amount of its reserves and other obligations under such contracts, or the amount which such insurer is required by the law of any country or possession outside the Republic of the Philippines to be invested in such country or possession, whichever shall be greater. SEC 207. An insurance company may 1. Invest in equities of other financial institutions, and 2. Engage in the buying and selling of long-term debt instruments, provided that any or all of such investments shall be with the prior approval of the Commissioner. Insurance companies may, however, invest in listed equities of other financial institutions without need of prior approval by the Commissioner. SEC 208. Any life insurance company may a. Acquire or construct housing projects and, in connection with any such project, may acquire land or any interest therein by purchase, lease, or otherwise, or use land acquired pursuant to any other provision of this code. Such company may thereafter own, maintain, manage, collect, or receive income from, or sell and convey, any land or interest therein so acquired and any improvements thereon. The aggregate book value of the investments of any such company in all such projects shall not exceed at the time of such investments 25% of the total admitted assets of such company on the 31st day of December next preceding, provided that the funds of the company for the payment of pending claims and obligations shall not be used for such investments. b. Acquire real property, other than property to be used primarily for providing housing and property for accommodation of its own business, as an investment for the production of income, or may acquire real property to be improved or developed for such investment purpose pursuant to a program therefor, subject to the condition that the cost of each parcel of real property so acquired under the authority of this paragraph, b. including the estimated cost to the company of the improvement or development thereof, when added to the book value of all other real property held by it pursuant to this paragraph, b. shall not exceed 25% of its admitted assets as of the 31st day of December next preceding. SEC 209. Every domestic insurance company shall, to the extent of an amount equal in value to 25% of the minimum net worth required under Section 194, invest its funds only in securities, satisfactory to the Commissioner, consisting of bonds or other instruments of debt of the Government of the Philippines or its political subdivisions or instrumentalities, or of government-owned or controlled corporations and entities, including the Bangko Sentral ng Pilipinas, provided that such investments shall at all times be maintained free from any lien or encumbrance, provided, further, that such securities shall be deposited with and held by the Commissioner for the faithful performance by the depositing insurer of all its obligations under its insurance contracts. The provisions of Section 198 shall, so far as practicable, apply to the securities deposited under this section. Except as otherwise provided in this code, no judgment creditor or other claimant shall have the right to levy upon any of the securities of the insurer held on deposit under this section or held on deposit pursuant to the requirement of the Commissioner. SEC 210. After satisfying the requirements contained in the preceding section, any domestic non-life insurance company shall invest, to an amount prescribed below, its funds in, or otherwise, acquire or loan upon, only the classes of investments described in Section 206, including securities issued by any registered enterprise, as this term is defined in Executive Order No. 226, otherwise known as the Omnibus Investments Code of 1987, and such other classes of investments as may be authorized by the Commissioner for purposes of this section, provided that a. no more than 20% of the net worth of such company as shown by its latest financial statement approved by the Commissioner shall be invested in the lot and building in which the insurance company conducts its business, and b. The total investment of an insurance company in any registered enterprise shall not exceed 20%, 20%, of the net worth of said insurance company as shown by its aforesaid financial statement, nor 20%, 20%, of the paid-up capital of the registered enterprise excluding the intended investment, unless previously authorized by the Commissioner, provided, further, that such investments, free from any lien or encumbrance, shall be at least equal in amount to the aggregate amount of 1. Its legal reserve, as provided in Section 219, and 2. Its reserve fund held for reinsurance as provided for in the pertinent treaty provision in the case of reinsurance ceded to authorized insurers. SEC 211. After satisfying the requirements contained in Sections 197, 199, 209 and 210, any non-life insurance company may invest any portion of its funds representing earned surplus in any of the investments described in Sections 204, 206 and 207, or in any securities issued by a registered enterprise mentioned in the preceding sections, provided that no investment in stocks or bonds of any single entity shall in the aggregate exceed 20%, 20%, of the net worth of the insurance company as shown in its latest financial statement approved by the Commissioner, or 20%, 20%, of the paid-up capital of the issuing company, whichever is lesser, unless otherwise approved by the Commissioner. SEC 212. After satisfying the minimum capital investment required in Section 209, any life insurance company may invest its legal policy reserve, as provided in Section 217 or in Section 218, in any of the classes of securities or types of investments described in Sections 204, 206, 207 and 208, subject to the limitations therein contained, and in any securities issued by any registered enterprise mentioned in Section 210, free from any lien or encumbrance, in such amounts as may be approved by the Commissioner. Such company may likewise invest any portion of its earned surplus in the aforesaid securities or investments subject to the aforesaid limitations. SEC 213. Any investment made in violation of the applicable provisions of this title shall be considered non-admitted assets. SEC 214. A. All bonds or other instruments of indebtedness having a fixed term and rate of interest and held by any life insurance company authorized to do business in this country, if amply secured and if not in default as to principal or interest, shall be valued based on their amortized cost using effective interest method less impairment and unrecoverable amount based on appropriate measurement methods which are generally accepted in the industry and accepted by the Commissioner. The Commissioner shall have the power to determine the eligibility of any such investments for valuation on the basis of amortization, and may by regulation prescribe or limit the classes of securities so eligible for amortization. All bonds or other instruments of indebtedness which in the judgment of the Commissioner are not amply secured shall not be eligible for amortization and shall be valued in accordance with paragraph 2. The Commissioner may, if he finds that the interest of policyholders so permit or require, by official regulation permit or require any class or classes of insurers, other than life insurance companies authorized to do business in this country, to value their bonds or other instruments of indebtedness in accordance with the foregoing rule. B. The investments of all insurers authorized to do business in this country, except securities subject to amortization and except as otherwise provided in this chapter, shall be valued, in the discretion of the Commissioner, at their amortized cost using effective interest method less impairment and unrecoverable amount or at valuation representing their fair market value. If the Commissioner finds that in view of the character of investments of any insurer authorized to do business in this country it would be prudent for such insurer to establish a special reserve for possible losses or fluctuations in the values of its investments, he may require such insurer to establish such reserve, reasonable in amount, and include a report thereon in any statement or report of the financial condition of such insurer. The Commissioner may, in connection with any examination or required financial statement of an authorized insurer, requires such insurer to furnish him complete financial statements and audited report of the financial condition of any corporation of which the securities are owned wholly or partly by such insurer, and may cause an examination to be made of any subsidiary or affiliate of such insurer as appropriate to specific investments as provided in appropriate circulars issued by the Commissioner. C. Investments in equity of an insurance company shall be valued as follows. 1. Listed stocks shall be valued at market value and periodically adjusted to reflect market changes through a special valuation account to reflect their realizable value when sold. 2. Unlisted stocks shall be valued at adjusted book value based on the latest unqualified audited financial statements of the company which issued such stocks, and 3. Stocks of a corporation under the control of the insurer shall be valued using the equity method, which is the cost plus or minus the share of the controlling company in the earnings or losses of the controlled company after acquisition of such stocks. D. The stock of an insurance company shall be valued at the lesser of its market value or its book value as shown by its last approved audited financial statement or the last report on examination, whichever is more recent. The book value of a share of common stock of an insurance company shall be ascertained by dividing 1. The amount of its capital and surplus less the value of all of its preferred stock, if any, outstanding, by 2. The number of shares of its common stock issued and outstanding. Notwithstanding the foregoing provisions, an insurer may, at its option, value its holdings of stock in a subsidiary insurance company in an amount not less than acquisition cost if such acquisition cost is less than the value determined as hereinbefore provided. E. Real estate acquired by foreclosure or by deed in lieu thereof, in the absence of a recent appraisal deemed by the Commissioner to be reliable, shall not be valued at an amount greater than the unpaid principal of the defaulted loan at the date of such foreclosure or deed, together with any taxes and expenses paid or incurred by such insurer at such time in connection with such acquisition, and the cost of additions or improvements thereafter paid by such insurer and any amount or amounts thereafter paid by such insurer or any assessments levied for improvements in connection with the property. F. Purchase money mortgages received on dispositions of real property held pursuant to Section 208 shall be valued in an amount equivalent to 90% of the value of such real property. Purchase money mortgages received on disposition of real property otherwise held shall be valued in an amount not exceeding 90% of the value of such real property as determined by an appraisal made by an appraiser at or about the time of disposition of such real property. G. The stock of a subsidiary of an insurer shall be valued on the basis of the greater of 1. The value of only such of the assets of such subsidiary as would constitute lawful investments for the insurer if acquired or held directly by the insurer, or 2. Such other value determined pursuant to standards and cumulative limitations, contained in a regulation to be promulgated by the Commissioner. H. Notwithstanding any provision contained in this section or elsewhere in this chapter, if the Commissioner finds that the interests of policyholders so permit or require, he may permit or require any class or classes of insurers authorized to do business in this country to value their investments or any class or classes thereof as of any date heretofore or hereafter in accordance with any applicable valuation or method. SEC 215. It shall be the duty of the officers of the insurance company to report within the first 15 days of every month all such investments as may be made by them during the preceding month, and the Commissioner may, if such investments or any of them seem injudicious to him, require the sale or disposal of the same. The report shall also include a list of investments sold or disposed of by the company during the same period. Title 5. Reserves. SEC 216. Every life insurance company, doing business in the Philippines, shall annually make a valuation of all policies, additions thereto, unpaid dividends, and all other obligations outstanding on the 31st day of December of the preceding year. All such valuations shall be made according to the standard adopted by the company, as prescribed by the Commissioner in accordance with internationally accepted actuarial standards, which standard shall be stated in its annual report. Such standard of valuations shall be according to a standard table of mortality with interest to be determined by the insurance commissioner. When the preliminary term basis is used, the term insurance shall be limited to the first policy year. The results of such valuations shall be reported to the Commissioner on or before the 30th day of April of each year, accompanied by a sworn statement of a designated company officer and stating the methods and assumptions used in arriving at the values reported. SEC 217. The aggregate net value so ascertained of the policies of such company shall be deemed its reserve liability, to provide for which it shall hold funds in secure investments equal to such net value, above all its other liabilities, and it shall be the duty of the Commissioner, after having verified, to such an extent as he may deem necessary, the valuation of all policies in force, to satisfy himself that the company has such amount in safe legal securities after all other debts and claims against it have been provided for. The reserve liability for variable contracts defined in Section 238 shall be established in accordance with actuarial procedures that recognize the variable nature of the benefits provided, and shall be approved by the Commissioner. SEC 218. Every life insurance company, conducted on the mutual plan or a plan in which policyholders are by the terms of their policies entitled to share in the profits or surplus shall, on all policies of life insurance heretofore or hereafter issued, under the conditions of which the distribution of surplus is deferred to a fixed or specified time and contingent upon the policy being in force and the insured living at that time, annually ascertain the amount of the surplus to which all such policies as a separate class are entitled, and shall annually apportion to such policies as a class the amount of the surplus so ascertained, and carry the amount of such apportioned surplus, plus the actual interest earnings and accretions to such fund, as a distinct and separate liability to such class of policies on and for which the same was accumulated. And no company or any of its officers shall be permitted to use any part of such apportioned surplus fund for any purpose whatsoever other than for the express purpose for which the same was accumulated. SEC 219. Every insurance company, other than life, shall maintain a reserve for unearned premiums on its policies in force, which shall be charged as a liability in any determination of its financial condition. Such reserve shall be calculated based on the 24th method. SEC 220. In addition to its liabilities and reserves on contracts of insurance issued by it, every insurance company shall be charged with the estimated amount of all of its other liabilities, including taxes, expenses, and other obligations due or accrued at the date of statement, and including any special reserves required by the Commissioner pursuant to the provisions of this code. Title 6. Limit of single risk. SEC 221. No insurance company other than life, whether foreign or domestic, shall retain any risk on any one subject of insurance in an amount exceeding 20% of its net worth. For purposes of this section, the term subject of insurance shall include all properties or risks insured by the same insurer that customarily are considered by non-life company underwriters to be subject to loss or damage from the same occurrence of any hazard insured against. The Commissioner may issue regulations providing for a maximum limit on the overall retained risks of insurers to serve as a catastrophe cover requirement for the same. Reinsurance ceded as authorized under the succeeding title shall be deducted in determining the risk retained. As to surety risk, deduction shall also be made of the amount assumed by any other company authorized to transact surety business and the value of any security mortgaged, pledged, or held subject to the surety's control and for the surety's protection. Title 7. Reinsurance transactions. SEC 222. An insurance company doing business in the Philippines may accept reinsurances only of such risks, and retain risk thereon within such limits, as it is otherwise authorized to insure. SEC 223. No insurance company doing business in the Philippines shall cede all or part of any risk situated in the Philippines by way of reinsurance directly to any foreign insurer not authorized to do business in the Philippines unless such foreign insurer or, if the services of a non-resident broker are utilized, Such non-resident broker is represented in the Philippines by a resident agent duly registered with the Commissioner as required in this code. The resident agent of such unauthorized foreign insurer or non-resident broker shall immediately upon registration furnish the Commissioner with the annual statement of such insurer, or of such company or companies where such broker may place Philippine business as of the year preceding such registration, and annually thereafter as soon as available. SEC 224. All insurance companies, both life and non-life, authorized to do business in the Philippines shall cede their excess risks to other companies similarly authorized to do business in the Philippines in such amounts and under such arrangements as would be consistent with sound underwriting practices before they enter into reinsurance arrangements with unauthorized foreign insurers. SEC 225. Any insurance company doing business in the Philippines desiring to cede their excess risks to foreign insurance or reinsurance companies not authorized to transact business in the Philippines may do so under such terms and conditions which the Commissioner may prescribe. Should any reinsurance agreement be for any reason cancelled or terminated, the ceding company concerned shall inform the Commissioner in writing of such cancellation or termination within 30 days from the date of such cancellation or termination or from the date notice or information of such cancellation or termination is received by such company as the case may be. SEC 226. Every insurance company authorized to do business in the Philippines shall report to the Commissioner on forms prescribed by him the particulars of reinsurance treaties or any new treaties or changes in existing treaties within 3 months from their effectivity. SEC 227. No credit shall be allowed as an admitted asset or as a deduction from liability, to any ceding insurer for reinsurance made, ceded, renewed, or otherwise becoming effective after January 1, 1975, unless the reinsurance shall be payable by the assuming insurer on the basis of the liability of the ceding insurer under the contract or contracts reinsured without diminution because of the insolvency of the ceding insurer nor unless under the contract or contracts of reinsurance the liability for such reinsurance is assumed by the assuming insurer or insurers as of the same effective date, nor unless the reinsurance agreement provides that payments by the assuming insurer shall be made directly to the ceding insurer or to its liquidator, receiver, or statutory successor except a. where the contract specifically provides another payee of such reinsurance in the event of the insolvency of the ceding insurer, and b. where the assuming insurer with the consent of the direct insured or insureds has assumed such policy obligations of the ceding insurer as direct obligations of the assuming insurer to the payees under such policies and in substitution for the obligations of the ceding insurer to such payees. SEC 228. No life insurance company doing business in the Philippines shall reinsure its whole risk on any individual life or joint lives, or substantially all of its insurance in force, without having first obtained the written permission of the Commissioner. Title 8. Annual Statement. SEC 229. Every insurance company doing business in the Philippines shall terminate its fiscal period on the 31st day of December every year, and shall annually on or before the 30th day of April of each year render to the Commissioner a statement signed and sworn to by the chief officer of such company showing, in such form and details as may be prescribed by the Commissioner, the exact condition of its affairs on the preceding 31st day of December. The annual statement shall be prepared in accordance with the financial reporting framework as determined by the Commissioner. In addition, the Commissioner may require other relevant information. The form and details of such other relevant information shall be prescribed by the Commissioner and shall form part of the supplementary schedules to the annual statement. Any entry in the statement which is found to be false shall constitute a misdemeanor and the officer signing such statement shall be subject to the penalty provided for under Section 442. SEC 230. Every insurance company authorized under Title 10 of this chapter to issue, deliver, or use variable contracts shall annually file with the Commissioner separate annual statement of its separate variable accounts. Such statement shall be on a form prescribed or approved by the Commissioner and shall include details as to all of the income, disbursements, assets, and liability items of and associated with the said separate variable accounts. Said statement shall be under oath of two officers of the company and shall be filed simultaneously with the annual statement required by the preceding section. SEC 231. Within 30 days after receipt of the annual statement approved by the Commissioner, every insurance company doing business in the Philippines shall publish in a newspaper of general circulation a full synopsis of its annual financial statement showing fully the conditions of its business, and setting forth its resources and liabilities in accordance with such form prescribed by the Commissioner. The Commissioner shall have the authority to make, amend, and rescind such accounting rules and regulations as may be necessary to carry out the provisions of this code, and define accounting, technical, and trade terms used in this code, provided that such shall be in accordance with internationally accepted accounting standards. Among other things, the Commissioner may prescribe the form or forms in which required information shall be set forth, the items or details to be shown in the balance sheet and income statement, and the methods to be followed in the preparation of accounts, appraisal or valuation of assets and liabilities, determination of recurring and non-recurring income, differentiation of investment and operating income, and in the preparation, where the Commissioner deems it necessary or desirable, of consolidated balance sheets or income accounts of any person directly or indirectly controlling or controlled by the insurance company. Title 9. Policy Forms. SEC 232. No policy, certificate, or contract of insurance shall be issued or delivered within the Philippines unless in the form previously approved by the Commissioner, and no application form shall be used with, and no rider, clause, warranty, or endorsement shall be attached to, printed or stamped upon such policy, certificate, or contract unless the form of such application, rider, clause, warranty or endorsement has been approved by the Commissioner. SEC 233. In the case of individual life or endowment insurance, the policy shall contain in substance the following conditions. A provision that the policyholder is entitled to a grace period either of 30 days or of 1 month within which the payment of any premium after the first may be made, subject at the option of the insurer to an interest charge not in excess of 6% per annum for the number of days of grace elapsing before the payment of the premium, during which period of grace the policy shall continue in full force, but in case the policy becomes a claim during the said period of grace before the overdue premium is paid, the amount of such premium with interest may be deducted from the amount payable under the policy in settlement. B. A provision that the policy shall be incontestable after it shall have been in force during the lifetime of the insured for a period of 2 years from its date of issue as shown in the policy, or date of approval of last reinstatement, except for non-payment of premium and except for violation of the conditions of the policy relating to military or naval service in time of war. C. A provision that the policy shall constitute the entire contract between the parties, but if the company desires to make the application a part of the contract it may do so provided a copy of such application shall be endorsed upon or attached to the policy when issued, and in such case the policy shall contain a provision that the policy and the application therefore shall constitute the entire contract between the parties. D. A provision that if the age of the insured is considered in determining the premium and the benefits accruing under the policy, and the age of the insured has been misstated, the amount payable under the policy shall be such as the premium would have purchased at the correct age. E. If the policy is participating, a provision that the company shall periodically ascertain and apportion any divisible surplus accruing on the policy under conditions specified therein. F. A provision specifying the options to which the policyholder is entitled to in the event of default in a premium payment after 3 full annual premiums shall have been paid. Such option shall consist of 1. A cash surrender value payable upon surrender of the policy which shall not be less than the reserve on the policy, the basis of which shall be indicated, for the then current policy year and any dividend additions thereto, reduced by a surrender charge which shall not be more than 1/5 of the entire reserve or 2.5% of the amount insured and any dividend additions thereto, and 2. one or more paid-up benefits on a plan or plans specified in the policy of such value as may be purchased by the cash surrender value. G. A provision that at any time after a cash surrender value is available under the policy and while the policy is in force, the company will advance, on proper assignment or pledge of the policy and on sole security thereof, a sum equal to, or at the option of the owner of the policy, less than the cash surrender value on the policy, at a specified rate of interest, not more than the maximum allowed by law, to be determined by the company from time to time, but not more often than once a year, subject to the approval of the Commissioner, and that the company will deduct from such loan value any existing indebtedness on the policy and any unpaid balance of the premium for the current policy year, and may collect interest in advance on the loan to the end of the current policy year, which provision may further provide that such loan may be deferred for not exceeding 6 months after the application therefore is made. H. A table showing in figures cash surrender values and paid-up options available under the policy each year upon default in premium payments, during at least 20 years of the policy beginning with the year in which the values and options first become available, together with a provision that in the event of the failure of the policyholder to elect one of the said options within the time specified in the policy, one of said options shall automatically take effect and no policyholder shall ever forfeit his right to same by reason of his failure to so elect. I. In case the proceeds of a policy are payable in installments or as an annuity, a table showing the minimum amounts of the installments or annuity payments. J. A provision that the policyholder shall be entitled to have the policy reinstated at any time within 3 years from the date of default of premium payment unless the cash surrender value has been duly paid, or the extension period has expired, upon production of evidence of insurability satisfactory to the company and upon payment of all overdue premiums and any indebtedness to the company upon said policy, with interest rate not exceeding that which would have been applicable to said premiums and indebtedness in the policy years prior to reinstatement. Any of the foregoing provisions or portions thereof not applicable to single premium or term policies shall to that extent not be incorporated therein, and any such policy may be issued and delivered in the Philippines which in the opinion of the Commissioner contains provisions on any one or more of the foregoing requirements more favorable to the policyholder than hereinbefore required. This section shall not apply to policies of group life or industrial life insurance. SEC 234. No policy of group life insurance shall be issued and delivered in the Philippines unless it contains in substance the following provisions, or provisions which in the opinion of the Commissioner are more favorable to the persons insured, or at least as favorable to the persons insured and more favorable to the policyholders. A. A provision that the policyholder is entitled to a grace period of either 30 days or of 1 month for the payment of any premium due after the first, during which grace period the death benefit coverage shall continue in force, unless the policyholder shall have given the insurer written notice of discontinuance in advance of the date of discontinuance and in accordance with the terms of the policy. The policy may provide that the policyholder shall be liable for the payment of a pro rata premium for the time the policy is in force during such grace period. B. A provision that the validity of the policy shall not be contested, except for non-payment of premiums after it has been in force for 2 years from its date of issue, and that no statement made by any insured under the policy relating to his insurability shall be used in contesting the validity of the insurance with respect to which such statement was made after such insurance has been in force prior to the contest for a period of 2 years during such person's lifetime nor unless contained in a written instrument signed by him. C. A provision that a copy of the application, if any, of the policyholder shall be attached to the policy when issued, that all statements made by the policyholder or by persons insured shall be deemed representations and not warranties, and that no statement made by any insured shall be used in any contest unless a copy of the instrument containing the statement is or has been furnished to such person or to his beneficiary. D. A provision setting forth the conditions, if any, under which the insurer reserves the right to require a person eligible for insurance to furnish evidence of individual insurability satisfactory to the insurer as a condition to part or all of his coverage. E. A provision specifying an equitable adjustment of premiums or of benefits or of both to be made in the event that the age of a person insured has been misstated, such provision to contain a clear statement of the method of adjustment to be used. F. A provision that any sum becoming due by reason of death of the person insured shall be payable to the beneficiary designated by the insured, subject to the provisions of the policy in the event that there is no designated beneficiary, as to all or any part of such sum, living at the death of the insured, and subject to any right reserved by the insurer in the policy and set forth in the certificate to pay at its option a part of such sum not exceeding 500 pesos, p. 500.00, to any person appearing to the insurer to be equitably entitled thereto by reason of having incurred funeral or other expenses incident to the last illness or death of the person insured. G. A provision that the insurer will issue to the policyholder for delivery to each person insured a statement as to the insurance protection to which he is entitled, to whom the insurance benefits are payable, and the rights set forth in paragraphs H, I, and J, following. H. A provision that if the insurance, or any portion of it, on a person covered under the policy ceases because of termination of employment or of membership in the class or classes eligible for coverage under the policy, such person shall be entitled to have issued to him by the insurer, without evidence of insurability, an individual policy of life insurance without disability or other supplementary benefits, provided application for the individual policy and payment of the first premium to the insurer shall be made within 30 days after such termination, and provided further that 1. The individual policy shall be on any one of the forms, except term insurance, then customarily issued by the insurer at the age and for an amount not in excess of the coverage under the group policy, and 2. The premium on the individual policy shall be at the insurer's then customary rate applicable to the form and amount of the individual policy, to the class of risk to which such person then belongs, and to his age attained on the effective date of the individual policy. I. A provision that if the group policy terminates or is amended so as to terminate the insurance of any class of insured persons, every person insured thereunder at the date of such termination whose insurance terminates and who has been so insured for 5 years prior to such termination date shall be entitled to have issued to him by the insurer an individual policy of life insurance subject to the same limitations as set forth in paragraph H, except that the group policy may provide that the amount of such individual policy shall not exceed the amount of the person's life insurance protection ceasing. J. A provision that if a person insured under the group policy dies during the 30-day period within which he would have been entitled to an individual policy issued to him in accordance with paragraphs H and I, above and before such individual policy shall have become effective, the amount of life insurance which he would have been entitled to have issued to him as an individual policy shall be payable as a claim under the group policy whether or not application for the individual policy or the payment of the first premium has been made. K. In the case of a policy issued to a creditor to insure debtors of such creditor, a provision that the insurer will furnish to the policyholder for delivery to each debtor insured under the policy a form which will contain a statement that the life of the debtor is insured under the policy and that any death benefit paid thereunder by reason of his death shall be applied to reduce or extinguish indebtedness. The provisions of paragraphs F, 2, J, shall not apply to policies issued to a creditor to insure his debtors. If a group life policy is on a plan of insurance other than term, it shall contain a non-forfeiture provision or provisions which in the opinion of the Commissioner is or are equitable to the insured or the policyholder, provided that nothing herein contained shall be so construed as to require group life policies to contain the same non-forfeiture provisions as are required of individual life policies. SEC 235. The term industrial life insurance as used in this code shall mean that form of life insurance under which the premiums are payable either monthly or oftener, if the face amount of insurance provided in any policy is not more than 500 times that of the current statutory minimum daily wage in the city of Manila, and if the words industrial policy are printed upon the policy as part of the descriptive matter. An industrial life policy shall not lapse for non-payment of premium if such non-payment was due to the failure of the company to send its representative or agent to the insured at the residence of the insured or at some other place indicated by him for the purpose of collecting such premium, provided that the provisions of this paragraph shall not apply when the premium on the policy remains unpaid for a period of 3 months or 12 weeks after the grace period has expired. SEC 236. In the case of industrial life insurance, the policy shall contain in substance the following provisions. A provision that the insured is entitled to a grace period of 4 weeks within which the payment of any premium after the first may be made, except that where premiums are payable monthly, the period of grace shall be either 1 month or 30 days, and that during the period of grace, the policy shall continue in full force, but if during such grace period the policy becomes a claim, then any overdue and unpaid premiums may be deducted from any amount payable under the policy in settlement. B. A provision that the policy shall be incontestable after it has been in force during the lifetime of the insured for a specified period, not more than 2 years from its date of issue, except for non-payment of premiums and except for violation of the conditions of the policy relating to naval or military service, or services auxiliary thereto, and except as to provisions relating to benefits in the event of disability as defined in the policy, and those granting additional insurance. Specifically against death by accident or by accidental means, or to additional insurance against loss of, or loss of use of, specific members of the body. C. A provision that the policy shall constitute the entire contract between the parties, or if a copy of the application is endorsed upon and attached to the policy when issued, a provision that the policy and the application therefore shall constitute the entire contract between the parties, and in the latter case, a provision that all statements made by the insured shall, in the absence of fraud, be deemed representations and not warranties. D. A provision that if the age of the person insured, or the age of any person, considered in determining the premium, or the benefits accruing under the policy, has been misstated, any amount payable or benefit accruing under the policy shall be such as the premium paid would have purchased at the correct age. E. A provision that if the policy is a participating policy, the company shall periodically ascertain and apportion any divisible surplus accruing on the policy under the conditions specified therein. F. A provision that in the event of default in premium payments after 3 full years premiums have been paid, the policy shall be converted into a stipulated form of insurance, and that in the event of default in premium payments after 5 full years premiums have been paid, a specified cash surrender value shall be available, in lieu of the stipulated form of insurance, at the option of the policyholder. The net value of such stipulated form of insurance and the amount of such cash value shall not be less than the reserve on the policy and dividend additions thereto, if any, at the end of the last completed policy year for which premiums shall have been paid, the policy to specify the mortality table, rate of interest and method of valuation adopted to compute such reserve, exclusive of any reserve on disability benefits and accidental death benefits, less an amount not to exceed 2 1/2% to 1/2% of the maximum amount insured by the policy and dividend additions thereto, if any, when the issue age is under 10 years, and less an amount not to exceed 2 1/2% to 1/2% of the current amount insured by the policy and dividend additions thereto, if any, if the issue age is 10 years or older, and less any existing indebtedness to the company on or secured by the policy. G. A provision that the policy may be surrendered to the company at its home office within a period of not less than 60 days after the due date of a premium in default for the specified cash value, provided that the insurer may defer payment for not more than 6 months after the application therefore is made. H. A table that shows in figures the non-forfeiture benefits available under the policy every year upon default in payment of premiums during at least the first 20 years of the policy, such table to begin with the year in which such values become available, and a provision that the company will furnish upon request an extension of such table beyond the year shown in the policy. A provision that specifies which one of the stipulated forms of insurance provided for under the provision of paragraph F of this section shall take effect in the event of the insured's failure, within 60 days from the due date of the premium in default, to notify the insurer in writing as to which one of such forms he has selected. J. A provision that the policy may be reinstated at any time within 2 years from the due date of the premium in default unless the cash surrender value has been paid or the period of extended term insurance expired, upon production of evidence of insurability satisfactory to the company and payment of arrears of premiums with interest at a rate not exceeding 6% per annum payable annually. K. A provision that when a policy shall become a claim by death of the insured, settlement shall be made upon receipt of due proof of death, or not later than 2 months after receipt of such proof. L. A title on the face and on the back of the policy correctly describing its form. M. A space on the front or the back of the policy for the name of the beneficiary designated by the insured with a reservation of the insured's right to designate or change the beneficiary after the issuance of the policy. The policy may also provide that no designation or change of beneficiary shall be binding on the insurer until endorsed on the policy by the insurer, and that the insurer may refuse to endorse the name of any proposed beneficiary who does not appear to the insurer to have an insurable interest in the life of the insured. Such policy may also contain a provision that if the beneficiary designated in the policy does not surrender the policy with due proof of death within the period stated in the policy, which shall not be less than 30 days after the death of the insured, or if the beneficiary is the estate of the insured, or is a minor, or dies before the insured, or is not legally competent to give valid release, then the insurer may make any payment thereunder to the executor or administrator of the insured, or to any of the insured's relatives by blood or legal adoption or connections by marriage or to any person appearing to the insurer to be equitably entitled thereto by reason of having incurred expense for the maintenance, medical attention, or burial of the insured, and n. A provision that when an industrial life insurance policy is issued providing for accidental or health benefits, or both, in addition to life insurance, the foregoing provisions shall apply only to the life insurance portion of the policy. Any of the foregoing provisions or portions thereof not applicable to non-participating or term policies shall to that extent not be incorporated therein. The foregoing provisions shall not apply to policies issued or granted pursuant to the non-forfeiture provisions prescribed in provisions of paragraphs F and I of this section, nor shall provisions of paragraphs F, G, H, and I hereof be required in term insurance of 20 years or less, but such term policies shall specify the mortality table, rate of interest, and method of computing reserves. SEC 237. No policy of industrial life insurance shall be issued or delivered in the Philippines if it contains any of the following provisions. A provision that gives the insurer the right to declare the policy void because the insured has had any disease or ailment, whether specified or not, or because the insured has received institutional, hospital, medical or surgical treatment or attention, except a provision which gives the insurer the right to declare the policy void if the insured has, within 2 years prior to the issuance of the policy, received institutional, hospital, medical or surgical treatment or attention, and if the insured or the claimant under the policy fails to show that the condition occasioning such treatment or attention was not of a serious nature or was not material to the risk. B. A provision that gives the insurer the right to declare the policy void because the insured has been rejected for insurance, unless such right be conditioned upon a showing by the insurer that knowledge of such rejection would have led to a refusal by the insurer to make such contract. C. A provision that allows the company to pay the proceeds of the policy at the death of the insured to any person other than the named beneficiary, except in accordance with a standard provision as specified under the provisions of paragraph M of the preceding section. D. A provision that limits the time within which any action at law or in equity may be commenced to less than 6 years after the cause of action shall accrue, and E. A provision that specifies any mode of settlement at maturity of less value than the amount insured by the policy plus dividend additions, if any, less any indebtedness to the company on the policy and less any premium that may by the terms of the policy be deducted, payments to be made in accordance with the terms of the policy. Nothing contained in this section nor in the provision of paragraph B of the preceding section, relating to incontestability, shall be construed as prohibiting the life insurance company from placing in its industrial life policies provisions limiting its liability with respect to 1. Death resulting from aviation other than as a fare-paying passenger on a regularly scheduled route between definitely established airports, and 2. Military or naval service, provided that if the liability of the company is limited as herein provided, such liability shall in no event be fixed at an amount less than the reserve on the policy, excluding the reserve for any additional benefits in the event of death by accident or accidental means or for benefits in the event of any type of disability, less any indebtedness on or secured by such policy, nor shall any provision of this section apply to any provision in an industrial life insurance policy for additional benefits in the event of death by accident or accidental means. Title 10. Variable Contracts. SEC 238. A. No insurance company authorized to transact business in the Philippines shall issue, deliver, sell, or use any variable contract in the Philippines, unless and until such company shall have satisfied the Commissioner that its financial and general condition and its methods of operations, including the issue and sale of variable contracts, are not and will not be hazardous to the public or to its policy and contract owners. No foreign insurance company shall be authorized to issue, deliver, or sell any variable contract in the Philippines, unless it is likewise authorized to do so by the laws of its domicile. B. The term variable contract shall mean any policy or contract on either a group or on an individual basis issued by an insurance company providing for benefits or other contractual payments or values thereunder to vary so as to reflect investment results of any segregated portfolio of investments or of a designated separate account in which amounts received in connection with such contracts shall have been placed and accounted for separately and apart from other investments and accounts. This contract may also provide benefits or values incidental thereto payable in fixed or variable amounts, or both. It shall not be deemed to be a security or securities as defined in the Securities Act, as amended, or in the Investment Company Act, as amended, nor subject to regulations under said acts. C. In determining the qualifications of a company requesting authority to issue, deliver, sell, or use variable contracts, the Commissioner shall always consider the following. 1. The history, financial and general condition of the company, provided that such company, if a foreign company, must have deposited with the Commissioner for the benefit and security of its variable contract owners in the Philippines, securities satisfactory to the Commissioner consisting of bonds of the Government of the Philippines or its instrumentalities with an actual market value of 2 million pesos, P2,000,000.00. 2. The character, responsibility, and fitness of the officers and directors of the company, and 3. The law and regulation under which the company is authorized in the state of domicile to issue such contracts. D. If after notice and hearing, the Commissioner shall find that the company is qualified to issue, deliver, sell, or use variable contracts in accordance with this code and the regulations and rules issued thereunder, the corresponding order of authorization shall be issued. Any decision or order denying authority to issue, deliver, sell, or use variable contracts shall clearly and distinctly state the reasons and grounds on which it is based. SEC 239. Any insurance company issuing variable contracts pursuant to this code may in its discretion issue contracts providing a combination of fixed amount and variable amount of benefits and for option lump sum payment of benefits. SEC 240. Every variable contract form delivered or issued for delivery in the Philippines, and every certified form evidencing variable benefits issued pursuant to any such contract on a group basis, and the application, rider, and endorsement forms applicable thereto and used in connection therewith, shall be subject to the prior approval of the Commissioner. SEC 241. Illustration of benefits payable under any variable contract shall not include or involve projections of past investment experience into the future and shall conform with the rules and regulations promulgated by the Commissioner. SEC 242. Variable contracts may be issued on the industrial life basis, provided that the pertinent provisions of this code and of the rules and regulations of the Commissioner governing variable contracts are complied with in connection with such contracts. SEC 243. Every life insurance company authorized under the provisions of this code to issue, deliver, sell, or use variable contracts shall, in connection with the same, establish one or more separate accounts to be known as separate variable accounts. All amounts received by the company in connection with any such contracts which are required by the terms thereof, to be allocated or applied to one or more designated separate variable accounts shall be placed in such designated account or accounts. The assets and liabilities of each such separate variable account shall at all times be clearly identifiable and distinguishable from the assets and liabilities in all other accounts of the company. Notwithstanding any provision of law to the contrary, the assets held in any such separate variable account shall not be chargeable with liabilities arising out of any other business the company may conduct but shall be held and applied exclusively for the benefit of the owners or beneficiaries of the variable contracts applicable thereto. In the event of the insolvency of the company, the assets of each such separate variable account shall be applied to the contractual claims of the owners or beneficiaries of the variable contracts applicable thereto. Except as otherwise specifically provided by the contract, no sale, exchange, or other transfer of assets may be made by a company, between any of its separate accounts or between any other investment account and one or more of its separate accounts, unless in the case of a transfer into a separate account, such transfer is made solely to establish the account or to support the operation of the contracts with respect to the separate account to which the transfer is made, or in case of a transfer from a separate account, such transfer would not cause the remaining assets of the account to become less than the reserves and other contract liabilities with respect to such separate account. Such transfer, whether into or from a separate account, shall be made by a transfer of cash, or by a transfer of securities having a valuation which could be readily determined in the marketplace, provided that such transfer of securities is approved by the Commissioner. The Commissioner may authorize other transfers among such accounts, if, in his opinion, such transfers would not be inequitable. All amounts and assets allocated to any such separate variable account shall be owned by the company, and with respect to the same the company shall not be nor hold itself out to be a trustee. SEC 244. Any insurance company which has established one or more separate variable accounts pursuant to the preceding section may invest and reinvest all or any part of the assets allocated to any such account in the securities and investments authorized by sections 204, 206, 207 and 208 for any of the funds of an insurance company in such amount or amounts as may be approved by the Commissioner. In addition thereto, such company may also invest in common stocks or other equities which are listed on or admitted to trading in a securities exchange located in the Philippines, or which are publicly held and traded in the over-the-counter market as defined by the Commissioner and as to which market quotations have been available, provided, however, that no such company shall invest in excess of 10% of the assets of any such separate variable accounts in any one corporation issuing such common stock. The assets and investments of such separate variable accounts shall not be taken into account in applying the quantitative investment limitations applicable to other investments of the company. In the purchase of common capital stock or other equities, the insurer shall designate to the broker, or to the seller if the purchase is not made through a broker, the specific variable account for which the investment is made. SEC 245. Assets allocated to any separate variable account shall be valued at their market value on the date of any valuation, or if there is no readily available market value, then in accordance with the terms of the variable contract applicable to such assets, or if there are no such contract terms, then in such manner as may be prescribed by the rules and regulations of the Commissioner. SEC 246. The reserve liability for variable contracts shall be established in accordance with actuarial procedures that recognize the variable nature of the benefits provided, and shall be approved by the Commissioner.